thank you very much for attending our webinar on data analytics in accounting and auditing. This webinar is part of the Professional Academic Forum of AmpCont, Brazilian Accounting Association, that brings together graduate programs in accounting. On behalf of the board of AmpCont, with José Elias, Edilson, and Andrea, I thank you for your virtual presence here today. I would like to thank our guest, Professor Partha Mohapatra. Professor Partha is Accounting Analytics Assistant Professor of California State University at Sacramento. He teaches Accounting Analytics, Accounting Information Systems, and Managerial Accounting, and his research interests are auditor, independence and reputation, PCAOB and audit quality, ethics in AS, event studies in accounting, text analytics, in fraud within accounting. He has served on the editorial board of journals like Auditing, a Journal of Practice, and Issues in Accounting Education. Professor Partha's presentation lasts about 1 hour, and then we will have another half hour for question and answer. So you can write the questions on our chat in English or Portuguese, and we'll have some Q&A after that, okay? Thank you, Partha, again. I will put it as host, so you can share your screen now. Have a nice presentation.
Thank you, Marcelo, for your introduction. And without much delay, I would like to start the presentation because I have too many slides to cover within 1 hour. And I've been teaching this analytics and accounting at Sacramento State University in both my undergrad and master's. I teach this as for a whole semester. So you can, I hope that you would appreciate that it is not so easy to compress everything into a 1 hour session. So what I would like to do in this 1 hour is to just give you a feel of what can be done using data analytics in the accounting, and specifically more in the auditing domain, including internal auditing. So with that, I would like to look at the scope of the talk. So I'll introduce you to the audit analytics and analytics in financial reporting. I'll talk about some simple techniques which are already being used extensively. And then I'll look into how big data has become important in auditing and whether it can be used in auditing. Visualization analytics and text analytics, some of the stuff I'll show how important it is. Actually, after text analytics, I'll show you a little bit about clustering, and then analytics that is used by Securities Exchange Commission in USA. And then I would show you some interesting examples of how imagery is used in accounting and auditing. And then I will have some slides for the research questions. Okay, so jumping into this, we now have a definition that has been given by the AICPA audit analytics. Now, basically, audit analytics, as has been defined by AICPA. AICPA is basically the American Institute of Certified Professional Accountancy. And so they define audit analytics as something which is a science of discovering and analyzing patterns, identifying anomalies, and extracting other useful information in data underlying or related to the subject matter of an audit through analysis, modeling, and visualization. And this should be done for the purpose of planning or performing an audit. Okay, so audit analytics can basically aid risk assessment through identification of anomalies and trends, and perhaps even through comparison to industry data, pointing auditors towards some items they need to investigate further. It can also potentially provide some audit evidence. Okay, so that is about audit analytics. Now, how does data analytics say affect financial reporting? Now, data analytics can provide better estimates, right? So what are accounting estimates? Examples of accounting estimates are most of the financial statements would reflect some accounts or amounts in disclosures that would require some sort of estimation. So some liabilities like pensions and post-retirement benefits have to be estimated, right? And revenue from long-term projects have to be estimated. Many expenses such as stock options or warranty expenses have to be estimated. So these estimates, they would be done more accurately if we can use data analytics. And this has been kind of researched by Ding et al. In 2019. And data analytics can also help the business environment through better social media analysis, and it can help to identify risk and opportunities through analysis of internet searches. So we'll see some examples at a later point of time. Now, data analytics can help to obtain audit evidence of the existence and accuracy of revenue. For example, you can do a three-way match, which is usually done, right? Right now, you do a three-way match of sales orders, shipping documents, and invoice manually. But a basic data analytics can help you to automate this process in a way that this matching is done and all the exceptions are thrown out instantly, right? The big thing is about data analytics is in the present big data environment is that you can use data analytics as for the full data. You can have it for all the journal entries, all the ledger data, and you do not have to do sample testing with current data analytic abilities. Okay, so that is one important thing that is to remember. Now, what I would do is that we'll start off with some simple analytic tools that are there. Okay. Now, how many of you, can you please put it in the chat? How many of you are aware of Benford's law? I should have actually put it as a, as a poll, but let me see if how many of you have know about Benford's law.
So far, we have 8.
8 out of 85. So we have about 10% of the participants, which is good because then I don't have to skip these slides. Okay. Benford's law is a very interesting law in the sense that what you do is that you take random numbers like from the invoice amounts or the payment amounts or random numbers in the ledger, you take all the numbers in the general ledger and extract the first digit of the number, okay? And if you extract the first digit of the number, then you will find that, again, I should ask it as a question, but I think it will take time in the Zoom session. If you extract the first digit of the number, then you will have 9 digits, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, right? You do not include 0 as a digit. So there would be 9 digits. And then you will have a variation of the frequency of these 9 digits, okay? Now, when I ask this question, what is the expectation of frequency of 1s and 2s and 3s of occurring in all these numbers in the general ledger or the journal entries or in the financial accounts, then the students come back and say that it is going to be equal. So it would be like 100 by 9, it would be somewhere around 10 to 11%, right? But strangely, the Benford's law predicts that the number of 1s will be much more higher. It would be around 32 to 33%, whereas number of 9s would be much less, say around 4 to 5%, okay? And using this analytics, auditors are, now it is actually a part of most of the basic auditing tools in US. And so using this, they can run all these transactions, or they can all this general ledger entry, and they can find out if there is any aberration that is there for a type of journal entry like the accounts payable or accounts receivable and so on, or invoice amounts and so on. Now, of course, there are criteria for when Benford's law should be applied and when it should not be applied. But I can tell you a simple thing is that it should be applied only when the number of data points are very large. It should not be used for, say, 50 data points, okay? Now, using this simple thing, I'm having a little bit of a problem in changing the slides. Now, using this basic Benford's law, actually, Dan Amirin from the Columbia University did a very interesting study, and which was published in the Wall Street Journal. And you can see that this basically is the way it should happen. So you can see that the number of 1s are around 30 and number of 9s are around 4 to 5, right? And so this is how, what Dan Amirin did was that he took all the numbers that are there in the financial transactions of all the companies, and from 2001 to 2011, and they found that, and of course excluded all the companies which had fraudulent reporting, and they found that those they are all agreeing to the Benford's law. In contrast, they took all the numbers that were there in the financial data, and in fact, I replicate this by telling my students to download the data of Enron's 2000 data and replicate that. And if you look at that, then the numbers are pretty large. So you can use Benford's law. If you know, if you have seen a financial accounts being reported, you will easily know that there are large data points. And the number 1 is very high. It should be somewhere here, and it is here, number 1. Similarly, number 9 is very high, and then other numbers are either less or more than what is predicted by Benford's law. So just by looking at this, of course, this was done after Enron happened, but nowadays analysts as well as auditors are looking into this for every company to see if there is a possibility of Benford's of an accounting fraud. So not only you can do it on a particular set of transactions, like the accounts payable data or the accounts receivable data or so and so on, but you can also look at the overall financial data that has been reported and make a risk assessment for fraud happening for that particular type of company. So this is a very simple way, technique for data analytics. Now, the other technique that is becoming very popular is the fuzzy matching. And many of you might have done VLOOKUP in Excel. Now, fuzzy matching is a very interesting concept which has been automated in many software, including Excel, where basically you try to match, say, the vendor's address with the purchase manager's address. Okay, even though the addresses may be not exactly the same, but it may be similar, and the probability of similarity may be calculated using the fuzzy matching. And if the probability is very high that the addresses of the purchase manager and the vendor's address are similar, then you have a inkling that there is a possibility of phantom payments being made by the purchase manager. This is just an example of how fuzzy matching can be used. Are you guys okay with me? If I'm going fast, please let me know, but then if I don't go fast, I may have to skip the slides. Now, looking beyond these simple techniques, we go on to how we can use big data. Now, I don't want to give a definition of big data. Most of you probably are aware of it. And most of you are aware also that the big data has essentially 4 characteristics. Okay, so big data has essentially 4 characteristics, and the 4 characteristics are called the 4 V's. So you have the volume, which means that the big data sets are so voluminous that they cannot be reasonably analyzed using, say, traditional database management systems or software. And then the second one is velocity, which means that the speed at which data is generated and used is very fast now. It is much faster than what it was even 5 years back. And then also streaming data, the real-time data, those implies that the speed has increased in data accumulation. And then the third one is variety, which refers to different types and sources of data, whether it is in social media, emails, videos, website traffic, tweets, blogs, RFIDs, data, GPS data, and so on. So different types of unstructured data as well as structured data can be part of the big data. And the fourth one that has been added is related to eliminating the noise in the data, right? Especially when we are talking about fake news environment nowadays, which is very relevant to US now. We have to make sure that we verify the data and it is providing truthful information. Okay, so now we have this big data available to us because of the advanced computing powers, and we can use sophisticated data mining techniques such as visualization, predictive modeling, association and clustering, and these can be used now on top of the big data to analyze. So why big data is important for in auditing, or why is it advantageous to use big data? Now, much of the big data is externally generated, okay, and acquired by auditors directly. Hence, the managers cannot really manipulate it, right? So big data in some instance can help supplemental traditional data, for example, when auditing a manufacturing concern, auditors may request managers, or they may request the managers to for sales forecast, because they can be used to understand the production volume and inventory levels. Now, if managers' sales forecasts are not available or are of low quality, then auditors could use some sort of text analytics, which we will go over in detail later, to analyze big data. And they can use the news articles, product discussion forums, and other social media to get some text analytics and data to understand the sales trends of the client. Now, that is completely different and outside of the company's boundary, and the managers can use that to forecast to some extent what would be that company's sales forecast, right? So that is another example. Now, another example is you have GPS data, right? The global positioning system. Now, that data can provide tamper resistant, because the managers have no control over it, on the GPS data, and it is tamper resistant and reliable data source, and it can complement. It does not have to be used independently. It can complement the shipping documents, which auditors traditionally use to verify shipments. Okay, and this has been verified by researchers Yu, Hung Din, and Zhang. So, because of this, big data is very useful in the current auditing environment. Any questions so far?
None until now. So I think that you can go away with your presentation and you do the questions in the end, okay?
Okay. I just wanted to make sure that you are able to understand me. Also, I understand that some of you are not very comfortable with English.
Okay.
So, but
I think that the people can write to us in the chat, and if you have some problem, I'll call you, okay?
Okay. Very good. So now we focus on visualization analytics, and I will start off with an example of visualization analytics. One of the most important data visualization applications is tracking employee claims. And now the data visualization can provide the management with real-time visualization of suspicious transactions, okay? And data visualization techniques can then display distributions in an effective way so that auditors can easily identify patterns hidden in the data, okay? Now, so it is very important technique. Now, this next slide is from one of the big four. They have kind of set up a dashboard for internal auditors where they can easily visualize the expenses of different employees. Okay, means look at this. Means I don't even know how they can create so many colors. Okay, but for different employees, you have different colors here. And this is an example where one employee is spending somewhere in March, the spending has skyrocketed, and the internal audit team would like to know the reason for the expenses for that particular employee to be why it is so high. So visualization is really very important to understand. And this is something which when I teach in my master's program, I teach this particular case study, which is a very interesting case study. And whenever I teach at the University of Strasbourg in France, I also use this particular case study. A picture is worth 1,000 words. This is a case study by Perels and Tomlinson. And this basically is about a bill and hold example. And for those of you who do not have haven't heard about bill and hold, basically bill and hold transactions occur when the seller records a sale, but the goods or services have not been delivered. So a common example is where a seller produces the products, but holds them for shipment and records a sale, say in December, okay? And the customer, however, does not take delivery until the following year. And the task is to determine if this sale is properly recorded at December 31st or not. There is a chance that there is some kind of revenue fraud that may happen if this bill and hold is not legitimate. Okay, there are only very stringent rules under which bill and hold is legitimate. Otherwise, it is not legitimate in accounting or under the GAAP terms. So because of that, this case study is around that. And so around this, the auditor would have if they have an inclination that there is a bill and hold problem in a particular company, maybe because the salespeople wanted to do the sales and then get it returned in the next quarter, maybe because they wanted their sales commissions, and or so on. So they would first create the indicators for bill and hold. So for example, if the returns are high at the start of the quarter, okay, that would be an indicator. So for every audit assignments, if you are looking at visualization analytics, which is becoming very popular, by the way, using Tableau or Power BI, then you'd like to know the indicators that you are looking at. And in this particular case, they start off with, I'm not going to go through the whole set of visualizations, but I'll just focus on the main one. But they start off with a visualization where they have a sales and returns companies at the company level. Okay, so at the company level, they have the data from 2013, 14, and 15, and for each of the month, what are the sales, what is the returns, and they find out that there is no problem in 2013 and 14, but they have in 2015 only, they have the problem of the returns being higher in certain months. So then they exclude the 2013 and 14 data and just focus on 2015. Now, once they look at that the sales do not show any abnormalities, but more of the returns, then they look more at the returns data for, and all this is done visually, and then they look at the returns data, and then they find that it is at the start of the quarters that the returns are happening. So that definitely they feel that there is a problem of will and hold. Now they want to go into it and look into deeper into a specific location out of the 5 locations they had. And this is what they see it. The other visualizations, I've just excluded it, but here you can see that this is the company level. And you can see that for the month of April, July, and October, the returns, which are noted by the red dots, they are pretty high, and the blue ones are basically the cells. Okay, the red dots are the returns. Okay, and then they move from company level to site level. Okay, in the site level, you can see that most of the returns are at the bottom of the blue bars, which it should be. But for Illinois, you can see that corresponding to this month, you can, this is for this month. This month and this month, right? So you can see that. So just using very easy visualization techniques in Tableau or Power BI, you can find that the problem of bill and hold is probably in Illinois. Then after that, the auditor would like to know if there is a particular employee who is more involved in this bill and hold. Okay, and then they look at the employee level, and when they look at the employee level, then they find that there is a blue bar, right? All of these are blue bars, and for those corresponding months where they have found about problems about bill and hold, and that blue bar is basically related to clear, right? Which would essentially mean that from a large data set, they have been able to now pinpoint to one particular employee, and they can focus their energy and start investigating just one employee for the possibility of bill and hold. And that is the beauty of this using visualization analytics. And you'll be surprised, this has the data set is very large. Okay, you can easily use millions of records of data sets on a visualization tool like Tableau and still get this in this kind of very self-explanatory visualizations. Okay, so that is why this is becoming very prominent in auditing. If you talk to any auditing professional, you will find that the maximum usage of analytics is in terms of this visualization analytics. Okay, because it is easy to understand, comprehend, and use as compared to some of the other tools that we are going to talk about now. The other thing that is becoming popular is text analytics. Now, this is more popular among the researchers than has been among the auditors. But auditors who have, especially the big four, who have sizable technological prowess and has a technological team to assist the auditing team, they are using this in auditing. Okay. Now, there is some research that has been already done, which shows that Twitter activity analysis can actually be used to predict stock market as a whole. Okay. So obviously, when you are analyzing Twitter activity, you are analyzing using text analytic tools, including programming like Python. Now, analysis of tweets before earnings management can thus help analysts to predict its earnings, right? And the same thing can be transferred to auditors to find out if they can predict some earnings and then match it with the reported earnings, right? If they can do this, then they will be doing better risk assessment. Now, text analytics are actually being used to some extent on journal entries. Okay, so there are each journal entry, you would be surprised. The journal entries would you would think that it is just numbers of that involves debits and credits, but the journal entries have footnotes, right? And those footnotes have text, and based on those text, some sort of text analytics on journal entries is already being done by auditors. And I really can't say how exactly they are doing it, because they are keeping it as a secret so far. Based on the premise, within the accounting example, if you are talking about accounting examples of text analytics, then based on the premise that the words selected by managers to describe the operations and language used by media to report on firms and markets have some sort of correlation with future stock returns, okay, and future earnings, and even future fraudulent activities of management. Okay, so if you look at the MD&As, you can look into some sort of words that describe this. So Lofgren and McDonald have this dictionary where they look into, say, positive words, negative words. Now, these positive words and negative words may be different in terms of English language compared to the financial language that they use. Okay, so the positive words are like enable, achieve, whereas negative words may be loss and adverse, and uncertain words like anticipate and depend and so on. So based on this categorization of words, which is there by Lofgren and McDonald, and they have their website which they update it very regularly, you can track the sentiment proportion over time and analyze it. Now, these are two very good articles, and of course they are themselves based on other research articles, where you use text information to provide insight into who, what, and when of fraud happening, especially as it relates to the third element of the fraud angle called rationalization. Okay, we could basically gauge a person's level of incentive, pressure, rationalization, and opportunity by analyzing their communication patterns. Okay, and this is being done by Ernst & Young, and what they have done is that they have developed 3,000 keywords that represent each side of the fraud triangle. And I'm sure that all of you are very familiar with fraud triangle, which represents opportunity, pressure, and rationalization. The words that were used for different categories of fraud, like financial statement fraud, asset misappropriation. So this will have different set of words. Okay, so you have to think about a different set of keywords for financial statement fraud, and different set of keywords for corruption fraud. Okay, they are not the same. Okay, so here is a case study that they took, was that financial statement with revenue recognition was and so the investigators searched about 1.9 million emails from 18 suspected executives. And they also searched their related attachments for these keywords. And the period they searched was from September, October, and November. And the keywords were expressed as a percentage of available emails in the database on a month by basis. So this is basically the fraud triangle. You have basically the three triangles which are showing here as opportunities, showing us like override, write-off, recognize revenue. Opportunities basically related to weak internal control. And rationalization is a lot. I think it is okay to commit these frauds. I deserve it, pressure. So those kind of, and based on these keywords, they create a O score, P score, and R score for each of these three sides of the fraud triangle. So basically evaluating these emails basically help us in identifying a person's motivation and the probable rationalizations, such as discontent for a firm, and so then it helps to identify disgruntled employees. Now, once you have done this, what they found was that for this period, the keyword hits as a percentage of total emails was almost flat. You can see that it is true for pressure, it is true for opportunities, it's true for rationalization. Once the September, October, and November of 2008 occurred, you see that there is a spike in this keyword hits. And that shows that there is a possibility of some sort of financial fraud. In this case, we are talking about financial fraud because those keywords were related to financial frauds. I'm skipping this. So once you have those P score, R score, and O score for those employees, you create a comprehensive fraud score. And that would be basically P score square plus R score square plus O score square, and then take a square root of that. Okay. And the higher this fraud score is, okay, then you focus your energy on that particular employee. Okay. So employee number 1 has a higher fraud score of 1.53, and I would like to go in detail about that employee's transactions and so on. Okay, and so on. You will focus on this more than say on, of course, this hasn't been sorted, but that is what I wanted to tell you, is that you can kind of shortlist the employees that you would like to investigate more if you're, so that is something, and you can do it for other types of frauds, but this was more related to financial fraud. Of course, there may be some limitations when data is collected outside of the United States, and international privacy laws may be more stringent and so on. But I would say that I was talking when I was giving this presentation in University of Strasbourg in France. I was not aware of the European laws, they told me that it is okay to analyze the emails, official emails, if the judge allows it and there is a possibility of fraud that has happened. And more important, you analyze the emails without reading them. So you don't really get into personal emails or anything. You are just analyzing based on the words, keywords, right? And that is not reading through the emails. So that is very ethical to do. So there is nothing unethical about that. You can do some further analysis using social network analysis to find which of these suspected employees are having possibility of talking to each other, and what kind of relationships they had. You can use clustering and natural language processing. We'll talk a little bit about clustering at a later point of time. You can then use time series analysis to find the period for which this has been going on. Now, we move on to text analytics in a different context on the management discussion and analysis section of the annual reports. And actually, SEC has developed a set of keywords from the MDA sections, which have been common among fraudulent flyers in the past. And these lists, they have put it into a thing called audit quality model. And that was being called as Robocop, even though currently they don't use that word officially. And so using text analytics, they can compare the test data of fraudulent firms with firms which have submitted their annual reports, say in the same industry group. And then they, based on the past, they already know that fraudulent companies have tended to talk more about things that really don't matter. They talk about blah, blah things, this, that, and those, but don't really talk about much about things that are needed to be talked, right? So this is what they find from hundreds of fraudulent reports that were identified in so many years of the existence of the Securities Exchange Commission. So using that, they need to forecast whether a particular company will have fraudulent reporting or not. So they use text analytics, and this is a real life application where they are using actually text analytics to identify fraud that or to identify companies that are prone to fraudulent financial reporting. Okay, and so there is another paper, actually. It is by Cecchini, Aitug, Coiler, and Partha in 2009, where actually they took this MD&As of annual reports, and using a similar kind of approach, they found that they could predict 75% of the times a company has committed fraud or not. And they could also predict 80% of the time whether a company is going to go bankrupt or not. So those kind of interesting research has also already happened, and which is being used for practical purpose also. The companies with poor earnings often file annual reports that are more difficult to read and executives tend to refer to themselves more frequently when their companies are doing well. So these kind of characteristics in the MD&As, which is full of text, of course, these characteristics are used for text analytics to by Securities Exchange Commission to predict, and then they can focus, they can red flag a particular company and then look into more detail. Now, I don't know really how they are doing it, and all those nitty-gritty things are always kept secret, but I can know that this may be used to red flag a company and then investigate it more. So text analysis is fairly prevalent in fraud detection. Okay, even in insurance companies, insurers they have concluded that people who are filing fraudulent claims tend to use I and we less often than honest policyholders. So that kind of text analytics in other areas are also helping us develop better textual analytic tools in the accounting domain. Now, firms engaged in fraudulent activity have also tended to overuse particular words and phrasing choices which are associated with relatively benign activities. They also tended to under disclose risks which are prevalent among a peer group, say within the industry. When a new filer has engaged in similar behavior, the system will then, when I say a system, the system of SEC, okay? The system of SEC will flag these types of unusual choices for examiner review. So I have to really move a little faster. So now we get into another type of analysis called cluster analysis, which basically assigns observations to homogeneous groups. Okay, clustering would improve the likelihood of discovering irregularities during fraud risk assessment. And basically observations in a cluster are similar to one another with respect to the variables of interest. We may have n number of variables, and related to that, you form some clusters, and within that cluster, the observations would be similar, but then it would be very different from the observations that are there in another cluster. Okay, that is what it is. So now, if you look at this figure, then you would have a visualization of what is a cluster, even though in multi variables, it would be difficult to depict it in a 2-dimension like this. But here you have one cluster and you have another cluster. Now, so this is very, you can easily know that these data points are very different from these data points. But what is important here is that there are data points which just don't fit into these clusters. Okay, these data points, you can see that they don't fit into these clusters or any other cluster. You cannot form a third cluster with them because they are very different. So in that particular case, you are calling these as anomalies, and you use these anomalies to predict something similar to finding out financial statement irregularities. Okay, so in fact, there is a research done by Deng and May who used clustering technique to analyze financial statements, and they found it to be effective in identification of financial statement frauds. Now, clustering is currently a semi-automated process, and hence trained auditors without adequate background do not possess the requisite skill set to use this data mining technique in a reliable, effective manner. So it hasn't picked up much among pure auditors. But then auditing teams are now using it along with the IT teams of the audit firm to look at possibilities of anomalies. Um, Here is an integrated example of the accounting or quality model. I talked a little bit about it in terms of the text analytics, but they also include several other factors in an advanced regression model to assess the likelihood that fraudulent activities are happening. And traditionally, they all used discretionary accruals, but now they are also using some other risk indicators and risk inducers like frequent conflicts with independent auditors, changes in auditors, filing delays, and so on. But in addition to these, you have the text analytics from the MDNS. Okay, so within the model, you have the text analytics from MDNS also. So based on past fraudulent filings, SEC developed a keyword. So this was what I talked. I should have actually bought it here. So firms engaged in fraudulent activity have tended to overuse this. So I already talked about this. So good that we can miss some slides. And then what are the impediments? It is not easy for the auditors to access the full client data. In order to have a good flavor of the audit data analytics, they should have access to full client data. On the other hand, the auditors also don't want to share much of the data with their clients. So for sophisticated data analytics, auditors need to access large data sets like populations and granular data, and including data fields and transaction type. But clients may not be willing to share everything with them. On the other hand, the managers, they want more information of how these auditors are using data analytics and what are the models they are using. And managers basically feel that they are entitled to this information, given that auditing is a partnership between them and the auditors. But auditors think they cannot share data analytics details. And this kind of tension is there between these two sets of people. And this has been studied by Austin Carpenter, Kristen Nielsen in their study in 2019. Transforming data into a format that is usable by auditors is also not so easy always. And we do not have really regulatory standards to provide guidance to auditors, except things are picking up, but clear guidance is not there. Some of the new things that are happening here, using drones to audit the inventory, that is interesting. PwC actually has it in Europe. So all people who are staying awake late in Europe and listening to this conversation, you'd be happy that PwC has a global drone facility in Poland. And one of the uses they suggest is asset inventory tracking. Okay, and they can look into the inventory of telecommunication and broadcasting masts and the devices installed on them, those kind of assets tracking they can do. And combined with technologies like radio frequency ID, that makes the process much more safer and much more efficient. This is a real example by Christ, Emers, Summers, and Woods. They did a study with sheep and other livestock using the drone technology with image counting. And they found that when they did that, the drones basically flies over the entire stock or flock of sheep or pens with livestock, and then they take images from the top, and that helps actually decreasing the inventory counting from hundreds of hours. It was like 600 hours to a few hours of like 45 to 50 hours. They also found that it really decreases the error rates. So for many of the companies, the balance sheets and this inventory and the assets are literally sitting on the ground, and this kind of drone technology in auditing can be really very useful. Okay. Similarly, auditors can use for assessing large mineral deposits or mining operations. Here is another thing that has come up, and this is imagery not from the drone, but from the satellites. So these two companies, RS Metrics and Orbital Insight, they provide real-time data feeds of store level parking, car parking lot traffic signals, okay? Whether the car parking lot is full or empty, and they extract that from satellite imagery to do the stock analysis in the US market, okay? So based on the number of cars parked in Walmart parking lot, one of the analysts, actually, Neil Curry from the UBS Bank, at that time suggested that Walmart stock was probably undervalued. And then when they really looked into it, they found that the prediction was correct. So now a lot of stock analysts who can afford it, apparently it takes almost at least 10,000 to 20,000 to get that data on real-time basis. And but the stock analysts have started using that kind of data to get some more information ahead of the game. Okay, so here are some research questions. I think can data analytics usage by internal auditors lead to decreased audit fees from external auditors? So if you do a survey of 500 S&P 500 in Europe or in Brazil, and you do a survey of the how much of data analytics is used by internal auditors, and then combine it with the audit fees for that company. So obviously the survey should include the name of the company, and then you can find out if the audit fees has decreased. There is a conjecture that maybe because of the uses of data analytics in by internal auditors, they are already decreasing the audit risk and improving the controls. So that is a possibility. Is earnings quality better for firms that use data analytics? So that is kind of related to what was in the previous one, is that if you are looking into, say, estimation of so many estimates are done, and if your finance and reporting department is using a lot of data analytics for many of the aspects in financial reporting, including estimating many of the things in the annual reports, like collections and bad debt and so on, then the quality of earnings probably would be better. And so that is something which would be interesting to look into. So related to that, whether the estimates are going to become better. Some of you who are from behavioral side of research, you can think about how creating certain types of visualizations do not increase cognitive load among auditors, because that is a big concern, that when you are creating these visualizations along with what they have, auditors cognitive load may increase, and that may impact their decision making. So research also suggests by Comerford, Dennis, Joe, and Wong, they have come out with a recent paper that auditors have a tendency to discount computer-based advice as compared to human advice. Even when both of the advice are similar, they just don't want to take the computer-based advice. So how suggest a way to ameliorate this problem? So that can be a good area of research for behavioral researchers. One of the challenges is to train these auditors. First, we need to find out, and I didn't find any paper, but to whether auditors who are already entrenched in using traditional audit tools, they are more difficult to train with these new innovative audit analytic tools. And if it is difficult, then what are the best practices to train these auditors who have little or no exposure to data analytic tools and principles, and make them more acquainted, because they are fantastic resources. They have excellent knowledge about accounting. They are very proficient in auditing. We need to find out ways to train them in the new audit analytic tools. So this is what it is. And so I open the forum to questions. I'm sorry, I went past a little bit, but not easy to tell everything within this short time. Marcelo?
Great. Thank you for your excellent presentation, Partha. I'm very glad, and you have some very good questions to ask to you. But before I ask you, as I'm a very opportunistic person, let me say two comments. Usually when I talk to my students about the data analytics for audit or to find fraud, I always tell them to follow the outlier, because the outlier basically is the frauder. And I usually ask to them to read the book How to Lie Using Statistics, because it's very directly with the last points that you point out.
Right.
Well, let me put some questions here. Jose Elias asked, how do you see the
I lost you. Marcelo, I can't hear you. Marcelo? Jose?
Hi, are you listening to me?
I think that I was booted out. Sorry about it for some reason.
Okay, I think that we have some major instability with the Zoom, because everyone has the same problem, seems to me.
Okay, so
Okay.
I thought it was me because of the internet problem or something, but
No, I had the same afraid with me.
okay.
Uh, okay, let me just put the
So can
chat
you repeat the
back.
question, Marcelo?
Yeah, well, let's continue with the questions. So, did you get the José Elias questions? This change from samples to audit all the transactions?
No, I did not get that whole question. I
Okay,
lost it for that.
okay, let me rephrase the question. How do you see the challenge in audit market to move to real-time auditing or to audit all the transactions instead of samples?
There are two parts to this answer. There is an optimistic one and there is a pessimistic one. Uh, so if the optimistic one is that, yes, what auditors have started doing or trying to, so to say, experiment is using to some extent complete data. And the pessimistic side of it is that when they're using it, they're having a lot of false positives in terms of the outliers. So when you are using a sample of say 300, and then you start using 30,000 transactions, then the number of false positives increase. And that is becoming, that means that the auditors should actually put in much more effort. And that means the audit fees would actually increase rather than decrease, which should be the objective also while using data analytics. So till this thing kind of balance out, we don't foresee that audit firms will start using full sample. The other thing is that the guidance is still not clear in terms of regulatory. The regulatory standards are almost clear about how to choose the sample and what statistical techniques we use for sampling and so on. Still now, the guidance is not very clear about how we are going to use the full sample and which all false positives, how we are going to deal with it. So full sample to some extent is being used in planning stage, but it is a long way to go right now.
Okay. Another good question is about the use of keywords. Like any other word, they are using in a context. So if the auditor or analyst does not read the email to understand the context, how will the analyst arrive at the proper and reasonable conclusion that such keyword indicates possibilities of fraud? In other words, we saw ensuring compliance with ethical code of conduct. How should the auditor ensure that he or she does not misinterpret a keyword out of context? Another question is about the same field, because if the frauders know that they are looking for keywords, they can change. In Brazil, it's very common. You see the use of different words with different meanings. So how to get these words without the context?
Right. So I'll first answer the second one because that is more easier to answer. So if you have seen my presentation, if you have noticed in my presentation, I have only given you just a small list of keywords. And that is probably the reason why both Ernst & Young and SEC do not publish these keywords. They are sacrosanct, they are very secret, so that those keywords remain in their lockers and if anyone is trying to commit fraud by changing those keywords, they don't. And the third thing, the first part of the question is related to context, and that is very true. And this is the problem with text analytics, is that sometimes, and when I'm teaching text analytics in a whole 3-hour class as an introduction to text analytics, I always emphasize this part about that context. So many times, if you are just looking for keywords, then it will not solve the purpose. And when you are doing a proper text analytics, you have to really also be looking out for the context, and there are ways to do it, which we did not talk about it. And for example, when I'm trying to make fun of someone by saying, "Oh, are you so good?" Now, good is a positive thing, right? But I'm pretty much saying that you are not so good, right? And whereas if you just pick up the keyword "good," then that would show it as a positive thing. Whereas within that context, it is a negative thing.
We have this problem in Portuguese because we have some expressions that use two negative words, and then the two negative words together become a positive context. Yeah, it's very hard to use dictionaries to capture the keywords because of this.
Right. So definitely that is a concern, but at the same time, it is being addressed with advanced text analytics. It hasn't gone off the radar, and it is being, the context is really important in any good text analytics.
Yeah, that's true. Another question from Edson. Which are the tech tools for data analytics that the auditors are currently using in the United States? If you have some examples. Here in Brazil, I personally have contact with the big four companies, and usually they use some of the techniques that you mentioned with some Python or R program, but they usually made their own product to sell
Tools.
to them. Yeah, their own tools.
Right. The big four are investing billions of dollars into the analytics, and they are using it for not only for their auditing side of, but also for their non-audit consulting side also. So the output that they are getting from this kind of investments is very good for them. So I know personally that the big four also are selling products which can actually, or selling services as well as products which transform the data of the client to be amenable to the audit tools of big data and analytics tools of big four auditors. So they are using that. And I know that in big four are also selling in certain countries to medium and small industries, small companies, some sort of audit tools also. I don't think they're selling it to big firms as yet. What was your specific question? Did it answer? I felt I didn't answer your question.
I think that what tools are the big four companies or the audits using for data analytics?
They are mostly homegrown tools, including for text analytics. For example, PwC has one text analytic tools they've developed in-house for looking into specifically for leasing kind of contracts. So the leasing contracts get into the tool, it is uploaded into the software, and it automatically instantly analyzes the text analytics and looks into if the contract is complete and there are not any issues and so on. So those, yeah, those tools that are being used by Big Four at least are mostly homegrown, as you mentioned it correctly. In fact, you answered the question actually, that they use Python, and Tableau is used extensively for creating dashboards and other things for clients, and and they are also used. Many of my accounting students, they keep telling me that the knowledge they gathered in from Tableau in the classroom is very useful for them to doing their job in the um, in the audit firm. And so the Python, R, and Tableau, and of course nowadays they are using Alteryx, which I did not talk about, and the audit process automation software also.
Okay, and with your personal experience, how professors are managed to include this subject in their courses, like continuous auditing courses or in forensic accounting courses or specific data analytics courses for accounting students? How to put all this subject into classes?
Yes, predominantly I've seen two categories within the academic community in USA. And one is like people like my department, we choose to have a separate course on data analytics in accounting, especially if we have found someone who is good in that job. Um, who has both knowledge of accounting and data analytics, who can pass it on to the students. And we offer it at the senior year or at the master's level, so that the students already have good knowledge about auditing and accounting before getting into this course, so that when I talk about uh, bill and hold, or some accounting concept like earnings management and accruals, they understand it. I don't have to teach it. And then there is another set of professors who or departments who have included analytics in each of the courses that they offer. So analytics is part of managerial accounting, analytics is part of intermediate accounting, analytics is part of auditing, and so on. So there are two approaches. There are pros and cons of both these approaches, but these are basically what people follow here.
Great. And let me put the last two questions. Here in Brazil, we have a lot of work with tax compliance. Do you have any case of this applied analytics for tax compliance?
Yes, I'm so sorry that I did not include that in this presentation. But I teach at least 2 weeks of analytics using in the domain of tax. So I have in my whole course, I have analytics for financial reporting, analytics for auditing, which is a much more larger number of weeks, and then 2 weeks of analytics usage in managerial accounting and analytics in tax.
Okay. And could you use data analytics and big data or even artificial intelligence on the improvement of the accounting measurements and even valuation? What do you think?
What was your question again, please?
If you can use data analytics, big data, artificial intelligence to improve the accounting measurements and even the valuation of a company, because I think that you have a lot of assumptions that you have to keep to do evaluation. So can I use the data analytics to help with this?
Oh, yes. Oh, yes. There is a very good possibility that data analytics can be used for valuation. Think about it. Goodwill is a very intangible measure, right? And the best way to estimate goodwill will be to use some sort of data analytics. So similarly, for valuation of a company, if you look at many of the elements of valuation, those can be much more refined if you use data analytics. That's a very good point.
Okay, just one last question from Professor Paulo. The data analytics, it's an important tool for research in auditing because the volume of data and everything else. One important discussion in auditing is skepticism by auditors. In your opinion, data analytics can improve the auditor's skepticism?
Data analytics can, I think more important than data analytics leading to auditor skepticism, I would say that auditor skepticism would probably be more for usage of data analytics. So auditors are by profession should be skeptical, and they should use all the tools and not just rely upon the measures given by the managers, and they should be skeptical about just the numbers provided by the managers, and they should find out if those numbers are correct or not by analyzing all the available data that is around in that industry or in that business environment or in the Twitter or in this unstructured data which is not provided to them by the managers.
Okay, thank you. Well, we will end now. Thank you again, Partha. It was a terrific lecture to us about how to use data analytics in accounting and auditing, and how to pursue very interesting research questions. I want to say thank you for everyone in the room, and we will put the record of this webinar at the UmpConch channel in YouTube. So thank you again, and please let me free to your final words.
Thank you so much. It was a pleasure, and thank you for organizing this. I am always there to disseminate the knowledge about data analytics in accounting and auditing. Any PhD student or any faculty member who is interested to contact me related to this, don't hesitate to contact me. I'm always there for you. I'm so happy that you organized this event. We need to broaden this knowledge across different countries and make sure that it filters down to the practice from the academia. Thank you so much.